You were the first on the FOMC to say the economy didn't need any more rate increases. Did the jobs report today basically vindicate your view?
Well, I wouldn't say vindicate. This is a journey, and we're going to be on this journey for a while. What I will say is I'm pleased with the number. It came in at a level that is consistent with what my outlook has been, and it really tells me that our policies are really starting to work through the economy in a way that can help us get to our 2% target for inflation with minimal pain is what I'm hoping for.
Well, what drove the decision on Wednesday to leave rates unchanged? You came into the meeting with inflation up a little bit. The last jobs report was very strong. Consumer spending was very strong, and yet everybody decided to go with the Bostic view and hold. What was behind the thinking there?
Well, I'll tell you what was behind my thinking on this. You know, in addition to looking at the data, I do a lot of on-the-ground intelligence, and in a period that was really unusual for me, everybody was saying the same thing, which is that things are slowing down. We are seeing the economy start to, quote, normalize is a thing that people have been saying relative to this hot pandemic period. When I get unanimity on that, that tells me that there's something that's happening on the ground that is probably stronger than what I might see in the data. And then the data, even though they did come in very strong in September, if you looked over a longer term trend, it still said that the economy was moderating. And those two things together made me very comfortable with the notion that we still have time to watch, be patient, and be cautious and make sure that we understand the trends and don't overreact to any single data point.
Well, barring some exogenous shock, would you say you're basically at the peak now that you don't need to raise rates anymore?
So what I would say is this. There are three possible outcomes. Either inflation is going to stall out in this trajectory, it's going to continue slow and steady, or it's going to go off a cliff. I have all of those possibilities in play, and I'm going to stay on that. Today, my outlook is that we're going to stay on that slow and steady. And if we continue to do that, then I think where we are now will be sufficiently restrictive to get us to the 2% level for inflation. But there's still a lot that's going to happen. And between now and even the next meeting, we're going to get a couple of jobs numbers, we're going to get a couple of readings for inflation, and that'll tell us and give us more signals as to what's going on in the economy.